All right, we're back with another podcast for the team here at Mitten Mortgage Lending. Since last time we put one of these out, we had a big event happen, UWM Live. Chris was one of the guest speakers there, a part of it. How was it, Chris? I know it's one of the big events in our industry.
Yeah, UWM Live was awesome. I mean, there was over 5,000 people there, brokers, bankers, realtors. People traveled from all over the country, came here to Michigan. Mortgage capital of the world, if you will.
Yeah.
Everyone came here. Like I said, brokers came from all over. It was nice. Got to meet a lot of people. Got to share some best practices. A lot came out of the event, and I know our whole team that went, everyone that came with us, they all pulled a lot from the event. But I'm sure some of you are familiar, and maybe some of you aren't familiar. But a massive product announcement happened. Matt Ishbia at United Wholesale Mortgage announced a brand new 0% down program, which is
Conventional
0% down program, which is awesome. And we're going to expand upon it here. I know we're going to talk about it a little bit, but it's not even super cut and dry and really small. It's quite expanded. There are two different options for it. I don't want to steal it all. I know we're going to dig into it a little bit here, but yeah, 0% down was announced, and there was a lot that happened that day, but that
stole the show.
That kind of stole the show.
Yeah. So there's two options basically with this 0% down conventional loan. There's two kind of basically buckets you can fall in. One of them is you being a first-time home buyer. So if you're a first-time home buyer and your credit is above 700, full stop, that's the criteria. You would qualify for 0% down. You can make as much money as you want a year. You can make $1 million. You can buy a house forever. 0% down, and you'd be qualified if you're a first-time home buyer and if that credit score is above 700. With the 0% down, it's limited to 3% of the purchase price or $15,000, whichever one of those comes first. So that's one bucket of it. All right. The other bucket is you do not have to be a first-time home buyer. You need a minimum 620 FICO score. Your area median income needs to be 80% or lower, which in Wayne County, Oakland, and Macomb, that basically means you make about $77,000 or less. And again, we can use just, if you're somebody where you're full-time, but you work hourly, but you also work some overtime, we can use just the hourly regular pay that you get to qualify for that. So there's ways that we can address that. But again, that is for everybody. You don't have to be a first-time home buyer. Your credit score just has to be above 620. And we have to be using under $77,000 for you to qualify for the loan.
Yeah, and I think it's important to note, Mac talks about 80% area median income. Don't try to qualify or disqualify yourself for this program. Call us, because you don't have to be a first-time home buyer. In some cases you do, in some cases you don't. Your income may matter, it may not. Don't say, oh no, I made too much money last year, because like Mac said, we can kind of pick and choose which parts of your income we can use. Now, doesn't mean we're guaranteed to be able to get you approved or not, but we might be able to exclude your overtime. We might be able to exclude your bonus. We might be able to only use bits and pieces of your income to get you into it. So most importantly, call us, get a hold of us, shoot us an email, find us on social media, whatever send a carrier pigeon. I don't care what you do. Get a hold of us and let's talk about it, because it is, quite literally opening doors for so many buyers and just providing so much opportunity that wasn't there before.
Yeah, and I'm seeing this, I don't know about you, but I've already seen it in a multiple of clients that I've talked to. So obviously there's clients that are purchasing, it may be their first home, maybe it's for, anything from like $100,000 to like $150,000, and they're the ones fitting in this 0% down, which is kind of normal, kind of what we have seen with stuff that's been around before. But I've also seen, just in a conversation I had last night with a client who filled out an application today, they were going through and their income is well over 100K. Their credit score is 790. They're looking to purchase something in the 350 range. And the one thing he said was, and he's a first-time buyer, and the one thing he said was, I kind of made a mistake though. I paid full cash for a quad recently, and my, what I have saved dipped a little bit. So he's like, I'm probably gonna have to save a little bit more. And right away, first-time buyer, credit's above 700, light bulb went off. I'm like, we don't have to wait at all. He's going to look at a home tomorrow now because of this. So I'm like, we don't have to wait at all. We have 0% down. He's like, that's perfect. He's like, I thought I was going to have to save for like another 2-3 months. But now it's somebody that can jump right in. And again, he's looking at something for $350,000 tomorrow. So this doesn't just necessarily mean it's going to fit for somebody that may be purchasing a home for $150 or under $200 or something like that. It can fit in a lot of different areas.
We could probably fit you into one of these buckets.
Yeah.
And if we can't, it's okay. There's probably something else for you, but we can probably fit you in one of these buckets. Similar to your story, I spoke with 2 clients yesterday. Their household combined income is over $200,000. They're first-time home buyers. Their credit's over 700.
Check.
They're buying a 400. They're tonight, just like you said, your guy is. I know right now they are shopping. They are looking at multiple $400,000 plus homes, and they are shopping 0% down, and they're qualified. They're in. They're going to put 0% down. They make over $200,000 household income. They are shopping for $400,000 homes with a 0% down program. So again, don't qualify or disqualify yourself for this. Call us, talk to us, let us help you out with it. We will probably be able to fit you into one of these buckets.
Yeah, for sure. And it's going to be, in my opinion, probably the product that's used the most by us this summer.
It's been the product that's
most talked about.
Most talked about by far. I've had a lot of people call and we talk about it and we chat about it, and some people decide to go a different route or do a different product, or they want to put way more money down, so things change. But it is by far it's been the hottest product since it was announced, and I've had more phone calls from it than probably any other product we've ever had to offer. I mean,
the other thing I get asked about too when I talk to clients about that, what are the fees associated to it? You know, how much higher is the interest rate and those things. So speaking of that, what have you seen?
So this is my favorite part about it. It's not most of these down payment programs that exist, most of these DPAs that exist, it's the too good to be true, right? So most of them are, hey man, like they're not really giving you this money for nothing. They're giving you a little bit, but they're charging you for it on the rate. You're getting a higher rate. You're getting worse pricing. You're getting these adjustments. You're getting these things. Because this is conventional, Fannie Mae and Freddie Mac have pricing adjustments and they have pricing caps built in. So when you hit these, and especially if you're a first-time home buyer, there's going to be pricing and rate adjustment caps that are built in there. I have clients that are qualified for 0% down, and because of their qualification, because they're a first-time home buyer, they hit those rate adjustment caps, and some of them, because of these caps and the things that Fannie Mae and Freddie Mac put in place, they're actually getting better interest rates with 0% down than other people who are out there maybe even putting 5 or 10% down that maybe aren't first-time home buyers, so they're not getting those caps. So the rates and the programs are phenomenal because it is conventional. You are still in a regular conventional loan. This is still a conventional loan. So you actually you're not paying extra. You're not paying a penalty. You're not being penalized. They're not hitting you for anything because we're putting 0% down. You're getting all the benefits you would of any other regular conventional loan. Oh, and by the way, you're getting this assistance so that you truly can put 0% down.
Yeah, so if you're out there, you're looking to be their first-time home buyer, looking to make a move, reach out to us. Talk to us about the 0% down conventional program. Real estate agents, if you got clients that you've talked to that have, that would fit into these criterias, that are pre-approved right now, maybe with somebody else, and you think they would be better off taking advantage of this program, obviously let us know. If you got somebody that's approved for a MISDA right now, I would definitely be calling us to check this out for sure, because I think it's something that would be better suited for a lot of people out there with this product. So next thing, talking about going through our loan kind of product of the day. That's the product that we're talking about right there, the 0% down. But this one's more, not necessarily a product, but an option, I guess you could call it, for when it comes to purchasing a home for certain situations, and that's using a gift of equity. So Chris, tell us about what a gift of equity is.
Before I get into the gift of equity, I guess I want to talk about something else that'll help explain the gift of equity a little bit more clearly. So generally speaking, not our special 0% down program, barring something special like that, generally speaking, anytime you buy a house, there are some things that you're just going to have to pay when you buy a house. I know when you refi, people talk about rolling costs in, rolling fees in, rolling that in. When we refi, whole different game. Refinance and purchase, separate categories. When you're buying though, when anyone's buying a house, they have to pay their down payment, obviously, barring a 0% or something like I said. They have to pay their down payment and they have to pay their closing costs. They have to be paid, and they have to be paid out of pocket. Lenders don't let you roll costs in on a purchase. They don't want you, starting with negative equity essentially. So you have to pay those things out of pocket. So the reason that I wanted to talk about that and the reason that I wanted to mention that is because a gift of equity, what a gift of equity is if you are purchasing from a family member, it's got to be from a family member.
So we're talking grandma, mom, dad.
Yep. So exactly, grandma, mom, dad, it's got to be from a family member. But if you're buying a house from a family member, and this happens all the time, the family member says, hey, Mac, we'd love to sell you the house. We're done with it. We got what we needed out of it. We only owe $100,000 on this home. The home is worth $150,000. I'm kind of just giving you guys some generic numbers now. Home is worth $150,000. We know it is. The neighbors just sold for $150,000 a couple weeks ago. We owe $100,000 on it. We don't need to make money on it. We don't mind. We're ready to move on. We'll sell it to you for $100,000, Mac. Well, rather than them selling you the house for $100,000, they have $50,000 in equity. They owe $100,000. It's worth $150,000. So the person selling you this house has $50,000 in equity. The gift of equity is just that. They can gift you that $50,000 in equity, and you can now use that $50,000, that gift of equity, to pay that down payment and pay those closing costs. So the reason I started with the down payment and the closing costs is to bring it full circle for everyone. If you go gift of equity and you have a family member selling you a home and they want to, quote unquote, give you a deal or give you a discount, well, let's use that equity and use that gift of equity so that you do not have to pay your down payment out of pocket. You do not have to pay your closing costs out of pocket. And that $50,000 in equity that they effectively don't want, that they told you they don't need, just give us $100,000 for it. That $50,000 in equity can be used to cover all of those costs, and you can truly buy a house and not pay down payment out of pocket and not pay closing costs out of pocket. You can truly buy a house, show up to the closing table with $0, sign all your papers, walk away owning a home, but you now own a home that you did technically put a down payment on and pay all of your closing costs, but you didn't pay them. The person who sold you that house gifted you that equity, and that equity paid for all of it.
Yeah, we got a situation coming up later on. That's exactly what happened.
I know you've got a good one that we can talk about.
They came with $0 to closing, were able to close and get themselves a new home. The other thing, though, not mentioned as well, is you can pay off debt with this equity as well. So you can pay off car payments, student loans, credit card debt. I've had people use gift of equity that needed to pay those things down so they could qualify. I had them pay it down because they needed to increase their credit score so they qualified. So you can pay that down payment, you can pay that cash to close, that closing cost, but also any debt that you may have, again, if there's enough equity there, or even if it's just a little bit, maybe there's just one car we want to pay off. You can pay those things off using that equity, and that, again, just gets rolled into your purchase and your new loan amount. That is something that's truly, truly super beneficial to a lot of people.
And it really allows us, I can't tell you how many times throughout the years someone's called me and said, hey, my parents want to sell me their house. I just talked to my bank. They said I don't qualify. So-and-so said I should give you guys a call. And I immediately dive into it. Okay, first things first, your family's selling you a house. What's the purchase price? Well, same story. Well, my parents said it's worth $150,000, but they told me they'll give it to me for $100,000. But I talked to the guy at the bank, and he said, I have too much debt. I don't qualify for this. Well, we start diving in. I start looking at what we can pay off. I can't tell you how many people have told me, tried to buy my mom's house, but I can't. I don't qualify. I look into it and say, wait a minute. Your mom has all this equity. She doesn't want it. She was already giving you a deal. Let's pay off this. Let's pay off that. Let's pay off your credit card. Let's pay off your car. Let's, whatever.
And as high as interest rates are right now, buying a home, everyone's rates are so high. They're still lower than those credit card payments.
Those credit card rates. Those credit cards are 30%.
Yeah, and they're still lower than a lot of those car rates that you're getting out there too.
Oh, yeah.
So rolling this all into a mortgage that you can eventually refinance when they do drop to 6, 5.5, 5, hopefully 4.5% one day, that's the way to go. Don't pay 15% or 20% on something when you can roll it in and pay 7.
Rolling it all into a mortgage too, back to just being financially savvy. When you're buying a house, when you're buying a mortgage, generally speaking, you're buying an appreciating asset. So rolling that stuff into a mortgage, that home, getting into that home, starting to pay that, you own that home over time. In theory, that home's doing nothing but appreciating. And like you said, down the road, let's refi it, let's figure it out, let's go from there. But I don't even want to get off the gift of equity standpoint, but yeah, like rates are high, but don't be paying credit card debt at 30% if we've got an option to get a little bit of that consolidated at a much lower rate.
Yeah, and that takes us right into our loan of the month, which is one that I did, and very similar situation, pretty almost exactly. Client said, my parents owe a little over 100, and they just want to sell it to us for that amount, but we don't have too many funds put away. Is there something we can do? And that's really how it started. And so I said, yeah, we can use a gift of equity that can cover your down payment, your cash to close, those types of things. So we went into it, and after looking at the client's finances, really our debt to income was too high. They weren't going to qualify. We needed to pay off some of this debt. So I said, hey, we can do a gift of equity. You guys have a car. They owe, 30-ish, 35-ish on it. I was like, we can pay that car completely off. You can lose that payment, and then you would qualify. But there was also two kind of higher ones on there. It ended up being a personal loan that they had and the other car payment. The other car payment wasn't as big. They only owed I think it was like $8,000 on it or something like that. And they were like, well, what if we just pay off the personal loan and the smaller car? We feel like we got a good interest rate on the higher payment. Did the math. Yeah, we can do that too. Eventually, after a little bit, they're like, well, why don't we roll all three of them in? Let's see what it looks like then. By the end of the loan, they literally walked out of their process, paid $0, got a home, and were completely debt-free. They had like 3 small credit cards, paid those boys off too. So they got rid of all of their debt, and now all they have is a mortgage payment. So not only is that going to open up all kinds of cash flow opportunities for them, but that credit score that they were a little worried about when it came time to refinance, that credit score could shoot up now because now all they have to take care of is that mortgage payment. And yeah, did they end up paying a little bit more with their mortgage? Yeah, because they rolled everything into it. But at the same time, it far outweighed what they were going to be paying monthly.
Their monthly expenses on a mortgage payment only was far less than their monthly expenses on a mortgage payment plus a car, plus a car, plus a credit card, plus a credit card.
Yeah.
So they were saving money. And to recap, just to pull it all back together, you're telling me that this almost sounds too good to be true. I know it's not because I know we do it here every day.
No, I'm looking at the final documents right here. We'll put them on the screen too.
But you're telling me these people came to you. They let's check the boxes. They bought a house and put 10% down.
Yep, 10%.
So they have 10% equity in their home, which is more than a lot of people start with. Most first-time buyers are putting 3% or 5% or something down. So they bought a house with 10% equity. So they now own an asset with at least 10% equity. They paid off a car. They paid off another car. They paid off 2 credit cards.
They paid off 2 cars, a personal loan, and then 3 small credit cards.
Okay, sorry. So we bought a house. We got 10% equity. We paid off a car. We paid off another car. We paid off a personal loan. And how many credit cards?
3 small ones.
And 3 credit cards. So we paid off
6 items.
We got a house with 10% equity, and we paid off
6
items.
Yeah.
And they showed up to closing to purchase this, to buy this house that we did. We put all this money in, we have all this money up, and they brought $0 to closing.
$0 to closing. That gift, there was $38,000 in car loans and personal loans, some more in credit card, $20,000 in down payment, and about $9,000 in closing costs. All that covered, showing up with $0 cash to close, getting themselves a house too that they got equity in. I mean, mom and dad hooked them up. Yeah, mom and dad hooked them up big time.
And that's the thing. This isn't for everyone.
And they're happy to do so. Yeah, happy to do so.
And this isn't for everyone, but if you've got a family member that's willing to sell you a house and wants to give you a deal in any way, shape, or form, you have to go gift of equity.
Yeah.
You absolutely have to go gift of equity.
Listen, it can really set you up for future financial success by doing that.
It changed these people's life in terms of future financial success because they essentially have a house now with 10% equity and they're debt free.
Yeah, and they got more equity in that because it appraised for way more than they bought it still. So there's still more equity there too.
There's even more equity there. Yeah. That was just based on the purchase price that we landed on.
Correct.
And I'm guessing you helped them come up with that purchase price because that was what helped get enough equity to make sure that all this happened.
Yep.
And you're telling me that even what the purchase price was, it's still appraised higher.
Correct.
So they're in a house with a ton of equity, and they are now no cars, no personal loans, no credit cards. They're essentially debt free.
Debt free without their mortgage. Yep. Debt free, just a mortgage.
that's as good of a story as I've heard in a long time in terms of
Definitely a great way to start. So yeah, if you're purchasing a home from a family member, this is something you definitely got to reach out, talk to us about. And I mean, even if you've talked about purchasing with it, this is definitely the way to go.
And I don't want to, we're not even going to talk about other lenders. We're going to talk about us. But I will say this: there are so many lenders out there that do not know what a gift of equity is.
Tons.
I cannot tell you how many times I've spoken to someone who was buying a house from friends or not friends, who was buying a house from family, and they weren't doing it this way, and we got it set up this way. This is far less common than it is common. This is a little bit more advanced, I would say, and a lot of people don't know about it. So if you're buying a house from a family member and you're not working with us, call us. But if you're not working with us, ask the person you're working with if you're doing a gift of equity, and if you're not, ask them why not. And if they don't know why not, again, back to call us.
Yeah, definitely the way to go. I remember when I did my first gift of equity when I was that young banker that didn't know much that's going on. Still don't feel like I know anything that's going on, but I was sitting right over there, and I remember telling the banker next to me about the situation that was going on, and you coming running out of your office going, gift of equity, we've got to do a gift of equity, and then breaking it down and showing us what a gift of equity was. And yeah, when I heard what it was, coolest program ever.
It's the only way to do it if you're buying a house from family, in my opinion.
Yeah. So last thing we want to hit on before we get out of here is it is now June when we're filming this, June when this will get released. Buying season is 100% officially here. School's out. People are making moves. More houses hitting the market. The market that was already pretty active in April and May is going to get more active. It's going to get more competitive. And the thing about the competitive part is you've got to be prepared to go in and make offers right away when you see a house, because if houses were lasting 4 or 5 or 6 days, a month and a half ago, it's going to turn to 2, 3, and 4 days right now. It's going to be rapid. So if you go see a home, you better be ready.
Max said it. Summer's here, and I know we've talked about it before. If you're not pre-approved, if you think you are buying, if you think you might buy in the next 3 months, and you're not pre-approved, you are behind the 8 ball.
Yeah.
You are losing. You are missing offers. Your dream home will be sold to someone who's prepared and someone who's ready. If you're not pre-approved, get pre-approved. And it's not a big daunting process. It's not crazy. Might we ask you for some docs? Might we get some stuff from you? Yeah, not even might. We're going to get some docs from you. We're going to ask for some stuff from you. But I can assure you, you want to gather those docs right now. Yeah. You do not want to gather those docs after you go see the house. You're all excited about it, and there's 30 offers in on that house. Because what happens if you get pre-approved now is we can vet you out. We can look through your income. We can do it. We can do income calcs. We can have an underwriter look at it if we're a little bit unsure. And what that leads to is super strong offers for you. If you want to buy a house and the listing agent has 30 offers in front of them, but I already had your loan underwritten or I already had your income underwritten, I can call that listing agent and say, hey, I am beyond confident in Mac's ability to purchase a home. I have his income underwritten. I have his documents. I have his credit report. I have everything. Mitten Mortgage Lending, we're not going to, we've vetted this out. We've taken our time with it. This person's approved. If you're not doing that, if you haven't done that already, you're going to lose out on an offer to someone that did that. I can guarantee you. I've seen it happen already. Like you said, we're in June now. I have already seen that happen multiple times, and it's only June. We still got the rest of June. We've still got July. We've still got August. I know it even dips into September usually, kind of when school starts. I mean, it's here, and if you're not pre-approved, you're going to be missing out. I can guarantee it.
Yeah, and by getting pre-approved, we could also see what these programs, like we're mentioning, which programs you fit into. What is it that you can afford? What can you budget right now? There's a lot of people when they get pre-approved, and that's the question I ask is like, what are you guys budgeting for this house payment to be? And they're like, not really sure. Just want to kind of see what it would look like if we purchased X home or whatever, 123 Main Street over in Trenton. We want to see what that would look like and can we budget for that? And then you have a basis, okay, maybe that's too high or maybe that's right on point. Maybe you think, oh man, we could afford a little bit more than that. So you get an idea on where you're going to be as far as that goes. That way you're not looking at homes that maybe you can't afford. and you're not wasting time that way as well. But there's opportunities to make your offer stronger when you want to make them. Appraisal waivers are a big thing, especially when things are competitive. Those are things that we can look at before you put in offers is, can you get that appraisal waiver so your offer stands out and makes it that much stronger? And lastly, too, that for me, another thing is there are, not a lot, but there are things that pop up on people's credit reports that they had no clue about. And it gives you time to clean those things up. Maybe they were a mistake that you made. Maybe the number of times I've had a client that got a credit card or they got a small personal loan and forgot about it. That's on there.
The Kohl's card. My wife forgot to pay the Kohl's card.
Yeah, the Kohl's card, the dreaded Kohl's card. So Home Depot the Home Depot card's out there too. But cleaning that stuff up will again make you better ready to buy, because you don't want to think that you're ready to go, fill out that application last second because you want to make an offer on a house that you saw an hour ago, and now this is an issue. You got to get that cleaned up now.
Well, and to expand upon that, I mean, I could talk to you for several hours about why people should get pre-approved now instead of waiting. But yes, credit issues pop up. But let's pretend you have no issues. Your credit is fine. You have enough income. You have enough assets, and everything is fine. But maybe your credit score is 720. And maybe I look at your credit report and I say, oh, if you just paid this credit card down a little bit, your credit score would jump to 760. And Mac, how much would you like it if by going from 720 to 760, I could drop your interest rate a little bit, because now you have better credit. By the way, when I drop your rate a little bit, your payment's now $70 a month cheaper. So do you want to increase your purchase price a little bit because we bumped your credit score and now your payment's a little bit better? So you might know you qualify. You might be sitting there saying, I know I qualify. I don't need to call these guys. I'll call them when I find something. There are some of you guys out there like that. There are some people out there that they know they qualify, and I know they qualify, and we all know they qualify.
But why just hope it works?
But I mean, and why hope it works? And beyond that, you might qualify. But how much better can we make your qualification? Mm-hmm. How much lower can we make your interest rate? How much better can we make this whole picture of homeownership for you if you call us now? Because if you call me now and your credit score is 720, and we start shopping and we start looking, and I have you pay down your credit card tomorrow, and we do a credit rescore next week, and then you find a house next week, great. We're going to close with a better rate. We're going to close with a better credit score. If you call me when you're holding your purchase contract and say, hey, I got it, here you go, I'm ready to go. Yeah, sure, you qualify, but I've got to close the loan with whatever credit score you have, and I have no room to really do my job and do our job and make sure that we're getting you the best rate and we're getting you the best payment and we're getting you all those things. So you might qualify, but how much better will you qualify and how much stronger will your offers be if you just get pre-approved now? Honestly, it's a 10-minute application, maybe another 10-minute phone call, and if we have to go through some stuff, maybe another 10-minute phone call.
Yeah.
Oh, by the way, it's free, and if you don't buy, that's okay. Mm-hmm. You're ready for the next time. You're a little bit more knowledgeable the next time you go to do this. So call us, ask those questions. We talk about this all the time. There are no dumb questions when it comes to this. You're buying a house. We're not ordering a pizza on an app. This is a big investment. Ask questions. Get qualified now, and go win your offers. Don't be one of the many in the sea of pre-approvals that come across someone's desk. Make your pre-approval stand out, get approved now, and I mean, work with a lender that is trusted locally for dishing out good pre-approvals.
Yeah. And that's something right there. I don't think anyone's ever said, man, I got pre-approved too early. I don't think that's ever been said. Should have got pre-approved so early.
I've never had, I've been doing this for a long time. I haven't run into that one yet.
Yeah. So a lot of good info today. Thank you guys for joining. Thank you for listening. I'm Mac. That's Chris. And we'll see you guys next time.